It's a fact that the election year cycle comes every 5 years in Kenya. It is therefore surprising that every 5 years we experience a decline in investment, particularly in the real estate sector. The current narrative is that the real estate sector has declined. Is this based on statistics or is it just grapevine talk? Our show today seeks to answer that question, whether this indeed is the case. And if it is, Dan and Esther will tell us more. Karibuni sana on the show.
Thank you.
Who is Dan?
Well, Dan is currently the Managing Director of Home Africa. My background is finance. I've spent most of my years training as a financial specialist. But over the years, I built up a lot of expertise in the area of real estate development. And that basically sees me doing what I'm doing at Home Africa today. Home Africa is a real estate development company. It's the only listed development company on the Nairobi Securities Exchange. We've been there for the last 9 years now. We believe that we hold the key, really, to how real estate should be done in the future, particularly in Kenya, as we now experience significant shortage in the lower income bracket of housing in Kenya.
Wow. And how is that going?
It's going well. I believe that in the next 2 to 3 years, we should see a lot of new developments that Home Africa-based developments that will focus mainly on the low income and the medium income level. I'm talking about houses that will be selling worth somewhere between 3 and 7 million shillings. My expectation is that it's not just the delivery of the units that will be important, but also the financing package around how those units are being sold in the market. I think there's a big challenge in that area, and there's need to be a lot of innovation in the financing models, both for the developer and for the mortgage that will be required for this kind of units.
I know that, Esther, we've hosted you on this show several times,
yes,
and you have been our expert in matters legal, in concerning matrimonial law, concerning when people are buying, conveyancing, and just giving us advice. But for the sake of those people who don't know you, who is Esther?
Esther is an advocate of the High Court of Kenya. I practice with the firm of MMC Africa Law. MMC Africa Law is a full-service law firm. We have an office in Nairobi and Mombasa. We have a total of 11 partners. Very vibrant law firm with a youthful workforce. Our main areas of practice are real estate, which is the one I head. Then we have corporate commercial. We have dispute resolution, intellectual property law, and banking and finance. So it's really full service, and we have been fortunate to have a fairly large number of clients, one of whom have been Home Africa for the longest time. We participated at the time when Home Africa was founded. So we've seen Home Africa grow in that journey, and we've worked with Dan very closely. So yes, real estate is my practice area.
Dan and Esther, would you say there is a slowdown in the market, and is it caused by the election season, or is there been an underlying problem that today we see more? What is the problem today, and why are people not buying? We have so many units in the market, but we are seeing units are not going. Some developers have also taken a wait and see approach during this season. Is it just the elections, or are there underlying concerns?
I think that there are multiplicity of factors that are affecting the current demand level, particularly in the real estate area. One of which is certainly the interest rate capping. Now, when the interest rates were capped, most of the banks must make, therefore, a decision about where they should invest their money. Most of the money usually would go to loans, of course, but they also invest significantly on treasury products, treasury bills, treasury bonds. And they must make the choice based on the return that they expect to make as a bank to their shareholders. So you find that when the interest rate was capped, it's easier for them to invest in treasury products and therefore less risk, as opposed to providing those fundings to loans. So the choice is so easy, and therefore they move all their money to the treasury products and keep them there, which means that they deny the private sector or any other buyers of product coming to the bank for facilitation. Now, that's one of the biggest problems. But the other big problem is that generally during electioneering period, a lot of people take a wait-and-see attitude. A lot of people decide to invest only after they are sure that the economic situation, political situation will remain stable after elections.
But elections come and go. And we see every cycle, every 5 years, people wait and see. And during elections, to be honest with you, there are such good deals.
Yeah. So if you're a long-term investor, this is usually the time to invest. Whether it's in property or it's in other asset classes. You will find a lot of the savvy investors on the securities exchange. This is the time they invest when the market is at a low ebb. Because in any case, in another 3, 4, 5, 8 months, the market will pick up. And that's where they'll make their money.
Yeah, and perhaps if I could just add, I think the other thing is that the investors don't know first of all, who's going to win, and therefore, depending on who wins, whether the policies are going to change. Yeah. So if you have the incumbent winning, then likelihood is that things remain the same. But if we have a change, then there could be change in policy. So there's that as well, so that you could invest now, then there's a change in government, there's a change in policy, and then your investment doesn't span out the way you had intended it to go.
I have seen that a lot of international investors actually holding back because of that. You know, recently we had an investor in the country and we brought them to Miga, and that's exactly what they said. Let's wait and see, and especially because of policy. How can we change that narrative?
I think that narrative could be changed by the leadership that is looking for elected positions. They need to come out very clear about their own belief system before the elections, during elections, and after elections. What is it that they will do to make sure that there's stability in the economic status? Without that coming out very clearly, a lot of people have a fear that, you know, if a new government comes in, for example, that policies around investments will change to the negative. But if I am a new person, an expected new person coming to leadership, I think it's important and necessary for me to, you know, waylay those fears and showcase how confident I am personally with the investment situation in the future, and therefore forget about the past.
Esther, I know that one of your biggest clients are the banks as well as developers. Which developments have you seen thriving and selling during this season?
The interesting thing is that some of the projects really are doing very well, and these are the projects that have chosen to be diverse. So instead of having just the one product, like for example, you decide all you want to do is industrial sales, instead you have multiple products. So you have low income housing, you have the higher end, you have commercial space, you have all of that. So that you have a diverse product, what you will find is that if one product is not selling, then another one will sell. Like Dan said, the prudent investor is the one who invests when the market is at its worst. So you'll find that the larger investors, particularly those who want to do commercial and industrial spaces, they will come and invest at that time. But maybe the mortgage and the house buyers, they might think that that is not the right time to invest. So it depends. If you have a wide range of products, I think one I can mention is Tattoo City. Tattoo City doesn't seem to have suffered this election fear at all, because they still continue to make the sales. Then the other thing is that also, in terms of diversity, don't concentrate, you know, in one area. Yeah. Be in multiple spaces. You can be in Nairobi and you're in Machakos and you're in a different county. So be around the country and take advantage of the county narrative. Yeah, because there's a lot of money that is now moving from Nairobi and going into the counties. Yeah, and suddenly things are picking up in the counties. So if you can be in those counties as well, then as a developer you should be able to succeed. It's not necessarily the elections. Yes. It's a multiple factors that maybe are affecting that. Because when I listen to Dan and when I listen to one or two developers who have mapped or designed their projects right, yes, and placed them in the right spaces, they are selling. Yes. Yeah. So is this just, you know, when you started you talked about grapevine. Maybe it's just grapevine. Yes. But in the actual sense, projects are moving.
So the election season is not holding us back.
I don't believe so. From a Home Africa perspective, we're doing better this year than we've done last year. My expectation is that that will continue. That's my expectation.
So what then I would say to someone looking to buy, don't listen to the grapevine, because grapevine is just grapevine. Just go out there and do what you need to do. If you want to buy, this is the best time to buy. Just look for the right product that is in the right space. If it's within Nairobi, then the right product. But even go to the counties, go out there, you'll find the products and buy them now.
You've heard it from the experts. Indeed, elections come and go. And yes, don't hold back. This is the right time to buy. Don't go away. We'll be right back with much, much more.